Hope everyone's doing well and had a good day today. This is the Emini review for Wednesday, July 10th, 2024. And overall, really interesting day. I'll start with the daily chart today. And coming into the day, we have a bull micro channel since July 1st. We've had 6 consecutive bars, and the lows of the bars have been at or above the prior bar's low. There's been no pullbacks in here. That actually increases the odds that the market will pull back, especially once we get to 6 or 7 bars in the micro channel. Then we've had a couple of bear trading range bars. Looks like the momentum is waning and we're going more sideways. I thought yesterday's low would be a magnet today, and then obviously a little bit of a surprise today. But coming into the day, expectations were sellers above yesterday's high, buyers below yesterday's low. But the bears don't have enough selling pressure for a reversal. This is a tight bull channel with no pullbacks. For the 5-minute chart today, I'll draw yesterday's high. And coming into the day, we had a gap up and then a doji on bar 1, trading range bar. And bar 1 was testing the high of yesterday, broke out by 1 tick, and then became a failed breakout. It pulled back. Bar 1 can be seen as a low 1 short. You can imagine the gap up as a bull trend bar and a vacuum test to the top of the trading range, the high of yesterday. But a trading range bar is not a good signal bar, and there's probably enough momentum to the upside to expect a second leg. So probably more buyers below bar 1 and a second leg up more likely. Bar 2 tried to break out below bar 1. There were buyers below. Bar 2 is a buy reversal bar with a bear body, so not a good stop order signal bar. There might be sellers above, but they may not come in until after the bulls get their second leg, maybe above bar 1. 3 is a doji, so we have 3 trading range bars on the open. Lots of trading range price action within the trading range of yesterday. Probably sellers above bar 3, but again, they may not come in until above bar 1, and probably buyers below. You can call it a double top, maybe bar 1 and bar 3, and a second entry short below 3, but it's a tight trading range, and we're still expecting a second leg to the upside. There's probably buyers below 3. And then 4, we had a trend bar, testing the high of yesterday once again, but closing at the high of yesterday, and not closing above the high of bar 1. So that's a problem for the bulls. It's not exactly a bull breakout. It is a bull trend bar and a bull breakout bar, but it's only breaking out of bars 2 and 3. It broke out above bar 1, but it did not close above. That's a problem. So this could be a vacuum test of resistance. Might be strong enough for its own small second leg up, but there's probably sellers not far above, and this is an overall trading range open. Inside bar on bar 5, and it's a high one, but it's a doji, and again, we're still at the top of a tight trading range, so not really ideal for the bulls. We triggered the high one and then pulled back and went sideways. So we've gone sideways for 2 or 3 bars now. But what about selling below 6? 6, not exactly a good sell setup. We have a couple of dojis, not good sell signal bars. Bar 4 also produced a micro gap. Bar 4 is a trend bar and created a space between the high of bar 3 and the low of bar 5. That's a sign of strength. You had bears who were selling above bar 2, selling above bar 3. They got trapped on bar 4. And then bar 5 pulled back, but did not get back to the highs of those bars. So bears unable to exit at their original entry price if they scaled in. And that micro gap is a sign of strength and a sign that we may get another leg to the upside. Trapped bears getting squeezed out, because this is not enough for the bears. couple of sideways bars after a bull breakout. We might get another push up. And then bar 7, another trend bar, bull bar closing on its high. It's good for the bulls, but one of the problems I see with it is that it might be consecutive buy climaxes. There's always a couple of different ways to look at it. You can see bar 1 as the first push, then bar 4, and then 7. Or you can see maybe a rally on 2, pull back, 4, and then 7. Either way, consecutive buy climaxes, but overall, pretty tight bull channel and a micro channel since bar 2. So the odds are the first pullback will lead to buyers below and a second leg up. This is overall probably a breakout on a higher time frame chart, even though we see maybe 2 or 3 legs to the upside. 7 might be a bar that attracts profit taking. That's the point of why I'm saying it's a possible parabolic wedge or consecutive buy climaxes. It's a good looking bar, but it's a bar that bulls might use to take profits. It's also the first bar breaking out far above yesterday's range, and we still need a follow through bar, and the bulls will wait and see what the follow through looks like before buying. And then 8, we have another doji, so we were getting buy climaxes, and then dojis, buy climax, doji. So we're getting consecutive buy climaxes followed by pauses. So it's not really ideal for the bulls. It's parabolic wedge behavior. It's probably more sellers above bar 8. It's a trading range bar after 2 or 3 legs up. But again, it's a minor 2 or 3 legs up. And on a higher time frame, this entire rally is 1 leg and a breakout. So any correction is expected to be minor and really be a pullback, lead to a second leg to the upside. So probably buyers below 8, scaling in lower. Inside bar on 9, but inside bars have a lower probability for breakouts, probably sellers above, and there might be buyers below, but the context isn't great. Bulls would rather buy a deeper pullback. And the absence of buyers creates that vacuum on bar 10. So it looks like bar 10 strong enough for a second leg down, and it looks like maybe 2 or 3 consecutive climaxes to the upside. The bulls might be exhausted, stepping aside, looking to buy a pullback. Possible breakout point tests are the bar 2 or bar 3 high, where that micro gap formed, which is that line. I'll make the high of yesterday blue. And bar 10 was enough damage. There's probably sellers above for a second leg down. Bear breakout on 10 and then follow through on 11. Not great follow through. The follow through bar did not close below the breakout bar, and it's basically a bull bar, closed above its midpoint. But bar 11 is a bad buy signal. There's probably sellers above, and again, still expecting a second leg down. We got a pause bar on 12. And the bears, they've done the minimum so far. They tested the low of the last buy climax, the bar 7 low. We dipped below it and then found buyers. And then a pause bar on 12, but still not a good buy setup. Probably more sellers above 12. It's a small trading range bar and an inside bar after a big enough bear breakout for a second leg down. And then continuation to the downside on bar 13, testing the high of bar 3. The high of bar 3 was 56.43.5, and the low 43.5. So it's a perfect test of the high. The gap did not overlap. We did not close the gap at this point. So it is possible we've had maybe 1, 2, 3 legs down to the breakout point. Some bulls, maybe they're aggressive. They'll buy that price and hope for an immediate reversal. But the buying pressure, since bar 10 isn't great, the bulls have to do more. And we'll probably go at least a little bit lower. Maybe test the moving average. Maybe test the bar 2 low. 14, we went a little bit lower and then reversed up. So now we have a more clear 2 legs down. And there might be a micro wedge on a smaller time frame. we went down on 11, pulled back, down on 13, pulled back, down on 14, and we are reversing up. But 14 is a buy signal bar in a micro channel. This is still technically one leg down if you're counting spike breaks. There's been no pullback since bar 9. So we have a micro channel from 9 to 14 that increases the odds of sellers above, even though the context is okay to look to buy and 14 is a good looking signal bar. The odds still favor sellers above. And then 15 triggered the buy and then reversed down, disappointing any bull who bought. 15 is a low one signal bar. It's a trading range bar and just above support, the moving average, and we still have an open gap. The gap isn't closed until price closes below the open of bar 2. Otherwise, on the line chart, the gap is still open because the line chart plots the closes of bars. So right now we still have an open gap from the open of 2 to the close of 15. The bulls are hoping that gap stays open, and the bears, of course, hoping they get down at least to the open of bar 2 and one tick below it. 15, not a good buy signal bar, probably sellers above. Some bulls will buy below, but if they are buying, it's for a scalp. And some bears will take a chance that we'll get down to the bar 2 low. We went sideways inside bar on 16. The past 3 or 4 bars, very sideways, tight trading range. You can consider it barbed wire. There's a lot of overlap and very small bars with big tails. Limit order market, sellers above 16, buyers below 16. Even though it might be a second reversal up after 2 legs down, if you're buying on a stop order above 16, the odds are the probability is low and you're going to get trapped. If you are buying above 16, you need to use a wide stop and scale in lower. Outside down 17 technically did not trigger the buy above 16, but 17 functions the same as an outside bar. So we're getting a bear outside bar at support, the moving average. Now, again, it's a micro wedge, maybe 1, 2, 3 pushes down, where the third push was an outside bar. Aggressive bulls will buy, but other bears will say the bulls who front ran the breakout of bar 16, they bought the close, they're trapped on 17, so some bears will sell, betting we'll get a breakout to the downside. And again, maybe test the bar 2 low and see what's there. But keep in mind the big picture and the expectations. We had the gap up on the open and then this rally, which was strong enough for its own second leg. Bar 2 to bar 9 is a breakout on a higher time frame chart. And it's basically, you can consider it a parabolic wedge. And so this entire sell-off, it's a bear channel. There's lots of overlap. There's really only one bear bar closing near its low, and that's the bar we're looking at now, bar 17. And this looks more like a bull flag than the start of a bear trend. 18, bear breakout, but pulled back immediately. Let's draw the bar 2 low. Getting close to it, we'll probably test it. But 18, there's probably buyers below. There's probably buyers below bar 2. Some unfortunate bear sold the low tick of bar 2. And if we get back there after this rally, they're probably going to buy back their shorts. They're probably sufficiently disappointed with this rally, and they'll use any test as a gift to exit at their original entry price. Several legs down, might be 1, 2, 3 pushes down. And again, lots of lines. I'm going to clean it up a little. And then 19. You can see what happened on bar 19. We tested 1 tick below bar 2 and found buyers below. It's also a breakout attempt of the bear channel line, which was a wedge bottom. And that's what Al would consider a dueling lines pattern, where there's a couple of reasons to expect support in this area with the double bottom support horizontal line and then this channel line. So a couple of reasons to expect support there on the low of bar 19. So some traders, they'll buy the low of bar 19, which is maybe the low of bar 2 or one tick below, taking a chance that that is support and the market will bounce there. That is the lower probability trade, but the best risk reward. Other traders will wait to see that the breakout fails. So we broke out below 2 and then rallied on bar 19. After probably 3 legs down, nested wedges, double bottom, then you see the failed breakout 19. Some traders will buy the close of 19. It's a higher probability trade after seeing the failed breakout. But still, it's not great. It's a doji, and we haven't had a bull bar in 3 bars. So other traders will wait for a stronger buy signal bar. And then that's what we got on bar 20. So then other traders will buy above bar 20. They see what happened on 19, failed breakout of a couple of support lines, and then a bull trend bar on 20. Possible major reversal, double bottom with bar 2, then a good looking bull bar closing near its high. And if you buy above bar 20, you can see you're entering at a much higher price than the trader who bought the low of 19, but you're entering with higher probability. And that's always the trade-off with the trader's equation. You have worse risk reward if you're buying above 20, but higher probability. So there might be buyers above bar 20, but the problem with buying above 20 is that bar 19 was a bad buy signal bar, and there were likely sellers above 19, at least for a scalp. So the high of bar 19 becomes support and a magnet, and you can see 21 immediately pulled back below that price. And bears who sold, they got trapped on 20, they got relieved on bar 21. So 21, possible breakout pullback setup for the bulls. Some bulls will buy the close of 21, betting that bears will use 21 as the bar that they'll exit their losing shorts on. Those bears who sold above 19, they got trapped on 20. Other bulls, like I said, they didn't want to buy above 20 because of the bad signal bar likely to get tested. So they'll wait for that low one. Maybe they'll buy below 21, but if you do try to buy below 21, you're trying to enter at a better price than the close of 21, and you run the risk of not getting triggered. And that's what would happen in this case on bar 22. Traders bought the close of 21. We did not fall below 21, and we got a breakout pullback for the bulls, and then a bull bar 22. Is there any reason to sell above bar 22? I don't think so. We have the wedge bottom, double bottom, and then the bear signal bar 21 did not trigger. It's a sign of strength from the bulls. The bulls bought the close of 21. They weren't even willing to buy below 21. And bulls who had limit orders to buy below 21 were getting trapped out. They're feeling a sense of urgency as bar 22 is rising, and eventually they just buy 1 or 2 tick pullbacks or just hit by the market. And we get another strong bull trend bar on 22. Overall, the market's either in a trading range or a bull trend. How could it be in a bull trend? Because of the gap up. So you have bears short down here, maybe above any of these bars, short for any reason. The gap up traps the bears. Then we get further trending behavior to the upside. And then we have this pullback, double bottom test of bar 2. It's possible we have a spike. The spike grows on a higher time frame at least. On this time frame, we have a spike, pullback, tight channel, and then a pullback to test the start of the channel. The market cycle completes, and then we have the start of a new market cycle. Buyers above 19, and then possible bull trend. But at the very least, we're expecting a couple of legs up to test the top of the range. A couple legs up in a trading range, a couple legs down. The expectation is a couple legs back up. Bull trend bar 23, a little bit smaller than 22, but it's good for the bulls that it's not climactic. And now we have a micro channel for 5 bars since bar 19, probably buyers below 23. And then 24, another bull trend bar, this time basically a shaved bar, tick gap from the close of 23 into the open of 24. It's a sign of urgency. Is it the top of a trading range? It might be, but the other possibility is that it's a bull trend. And this breakout is strong enough to reset the market cycle. It's not clearly a second leg trap. There was no leg 1 down here leading up to it. And you can argue leg 1, leg 2, but to me, this is overall trading range, and this is a new breakout. 3-bar breakout. The bars are fairly uniform in size. 3 points, 2.5, 2.5. That's good for the bulls. There's other characteristics that are good. The bars are closing on their highs. There's little overlap. We have a tick gap. We have a micro gap. Bears who sold above 21, they're getting trapped further and further. So to me, this is a breakout that will likely get a second leg. And then more buying on 25, but finding sellers above the prior high of the day, above bar 8 or 9. 25 likely to lead to a minor reversal. It's a bad sell signal bar. It's a reversal bar, but it has a bull body, and it's still a micro channel since bar 19. Bears will argue it's a buy vacuum and test of the top of a trading range. But where's the selling pressure in this rally? The Bears got 1 bar, but that's it. And that's not enough. So a second reversal is the minimum requirement to be looking to short for the Bears here. So selling below 25, not really an option. It's probably buyers below, scaling in lower. Inside bar 26, small bear bar, and probably just part of a pullback. Micro double bottom. You can see we sold off on 25 and rallied. Sold off to the same price on 26, rallied into the close, but small bar, trading range bar. There might be sellers above, but if you are selling above, you're selling against a pretty strong breakout, and you're selling for a scalp. And it's better to look to enter in the direction of the trend. And I should have mentioned, probably always in long probably always in long back here based on context. But with the bars, either here or here, it's always in long. So with that said, 26 is not enough reason to be looking to sell. Outside up 27, not technical, but the low is at the low of the prior bar and the high is above the prior bar. 27 will function as an outside bar. Just like anything else in trading, outside bars are context dependent. Because the market's in a trading range most of the time, we see outside bars in trading ranges most of the time. And I'm quoting Al when I say that outside bars in trading ranges are meaningless. And what he means by that is there's no special significance to buying above a bull outside bar or selling below a bear outside bar. It's actually the opposite of what you should be doing. And that's because outside bars are trading range bars. They're expanding triangles. So if you're buying above a bull bar like 27, you're effectively buying the high of a trading range. And if you're buying above 27 after the market's sold off on 25, might not be ideal. It's a possible double top. Now the reversal is still likely minor. You can still buy here. You can still be long here. Stop below the breakout. It's still always in long. We're still expecting a minor reversal. But it's just not ideal. The market could easily pull back, especially with 26 being a bad buy signal bar and being a high 1. High 1s typically trigger and then pull back more deeply. And then we get a high 2 or a high 3 pullback that leads to trend resumption. So not ideal to buy 27. The bulls might use it to take profits. Aggressive bears will sell and at least go for the high of 26. And then we had an inside bar On 28, bear trend bar. It's a shaved bar with no upper or lower tail. But now 28 is, you can see it as a second leg down. We sold off from the high of 25 down to the low of 26, 27, maybe a pullback, and then a second leg down. 2 legs sideways to down after a strong bull breakout. There's probably buyers below 28, and it's a tight trading range for 4 bars. So strong looking bear bar, but not especially big. It's really an average bar, and it's low in a trading range, which is probably a bull flag. So better to buy below 28. Some traders will buy the close or buy below it. And then another bull trend bar on 29, inside bar. So consecutive inside bars. I pattern, and the market is getting squeezed. It's a triangle. It's a bull flag. And in this case, the breakout probability favors the bulls, probably by at least 5%. So probably buyers above 29, and any bear hoping for the bear breakout on 28, maybe front running the breakout, who sold the close, they're going to exit above a bar like 29. 30, the bulls got the minimum breakout to the upside, but there was a deep pullback. And what I mean by that is we broke out above bar 29. I wasn't watching today. I actually don't know what happened first. We may have broken out first. We may have sold off first. But either way, we tested the apex of the triangle, the middle of this tight trading range, and then rallied on 30. So lots of overlap, bar 30 with 29. What do the bears do? Well, there's probably buyers below 30, and there's probably buyers above 30. It's probably a bull flag and not a strong reversal setup. So the bears will wait to sell higher, and the bulls, expecting a second leg after this and probably a measured move, will look to get long. So there's probably an imbalance here with more buyers than sellers. 31, bull trend bar breaking out to a new high, closing at a new high. That's good for the bulls. It's not climactic, and this looks like it could be the start of the second leg, and we're probably going to try to get to this measured move target. A pause on 32, but what about selling below 32? It's not enough. You can call it a higher high double top with 25, but it's a weak signal bar, and it's a micro channel all the way since really bar 19. We haven't had a pullback. Is that true? I think that's true, yeah. We have not had a low below the prior bar's low all the way since down here. That increases the chances that there's buyers below bar 32. 33, we tested the low of 32 and then reversed up. High one on 33, but closing on its high and still expecting higher prices with a magnet above. No reason to sell, probably going higher. And then a vacuum up to test that magnet. You can see we got there on 34 and pulled back right when we touched it. That's due to bulls taking profits. But what about selling? What about setting a limit order to go short at this line because it's a measured move? You need at least 2 reasons to take a trade. And that might be one reason, but you got to ask yourself what the second reason is. And the reality is this is too tight. This bull channel is too tight. It's a breakout on a higher time frame. You might argue we have a parabolic wedge, 1, pause, 2, pause, 3, a climactic third push, but I think you're really pushing it, trying to argue the bear case for limit order sell there. For me, I would wait for more evidence of selling pressure. So we are at a measured move target, but that doesn't mean we're necessarily going to stop there. And this is still a tight bull channel. We could easily continue to rally. And that's what's happening on 35. Now, what is bar 34 or 35? Is that an exhaustion gap or a measuring gap? It's one of the two. This was a breakaway gap or a breakout gap, the first leg. And this is either between. This might be extending the trend. It's either the end of the trend or it's sort of the middle of the trend. And in this context, you ask yourself about the selling pressure today. and all through here. Reality is it's probably a measuring gap. What's a measuring gap? I'm going to explain that here and show it. So first we're going to find the midpoint of these bars. Actually, let me go a couple more bars to make sure the gap doesn't continue. But after these climactic bars, a little bit climactic, the bars are growing from 33, 34, 35. It will attract profit taking. But again, profit taking is not enough reason to go short. Probably going to find some sort of measured move up of these bars. And then still follow through on 36. It's not very strong. It's a trading range bar with a bull body, but it is the minimum. There's probably buyers below 36. And then outside down 37. Okay, so we have a possible measuring gap here. And I will explain what that is. So from this breakout point, so we'll use the body of 34 to the body, the close of 35. And we want to find the midpoint of that gap. So that's that red line. And then what we're going to do is take a measured move from the start of the bull leg, bar 19 low, bring it to the midpoint of that gap. That brings us all the way up here. At this point, there is directional probability that we'll go up here before back down here. And that's because of the momentum, the lack of selling pressure, and the overall context. So I'm going to draw a line up here so we can delete some lines. And we'll just make that the measuring gap, measured move. Outside down, 37. Remember what I said about outside bars? This is an expanding triangle, so we're probably low in a trading range on a smaller time frame after a pretty strong bull breakout. We might get a little bit of a pullback, but the pullback is expected to be minor. There's probably buyers below 37 scaling in lower, but 37 might be strong enough for a second leg down. And then 38, another doji. So what we might have here, it's hard to see and it's confusing on this chart. It's probably more clear in a smaller time frame, but it's possible the market sold off on 36, rallied, sold off on 37, rallied, sold off on 38. Might be 3 minor legs down and a wedge bull flag. Some traders will buy above 38, even though it's technically a high 1 on this chart. It might be the bottom of a trading range, like I mentioned, the bottom of 37, and a wedge bull flag after a strong breakout with a lot of momentum and not a lot of selling pressure. Then another bull breakout, 39, probably going at least a little bit higher. We are trapping bears who sold above 37. So any pullback, the bears will likely look to exit at the high of 37. The high of 37 becomes support. Pull back 40, and look where we're testing. Looks like we're testing the high of 37, and that's where the bar closed. So probably a breakout pullback. We could pull back a little deeper, but there's no reason to sell. Is it a second entry short? Is it a low 2? I'd probably call it a low 1. I think 39 would reset the bar counting, but there's no reason to look to sell right now. This is a very tight bull channel. Basically, we're watching a breakout unfold in slow motion on a higher time frame chart. And is there any reason to be looking to sell when the market looks like this or this? There's really no reason to be. Buyers below 40, we're testing a little bit lower, testing the micro gap, the breakout point, the high of bar 38, not quite getting there. It's a sign of strength for the bulls. Would have been stronger if bar 40 was another bull bar. The strongest micro gaps are ones like this, where the bar before 33 is a bull bar, and then all the way up to here, 36, another bull bar. This entire gap, this is a big gap, and there are trapped traders in this area. Bulls never got long, bears trapped into shorts. That's why the pullback is so shallow before another leg up. Is 39 the second leg from this? Probably not. It's probably a minor second leg, but this could all be one leg. Get a minor pullback and then a bigger more symmetrical in size second leg. Probably sellers above 41 taking profits, but again, no reason to look to be getting short. And then 42, another bull breakout, possibly 3 pushes up, but it's a minor wedge. There's not enough selling pressure, there's open gaps, and that's a warning that this wedge will not behave the way a traditional wedge should behave, which is you get 2 legs sideways to down and a test of the bottom. In this case, this is probably a tight bull channel, and then more breakout to the upside. So consecutive bull bars with 43 growing in size, sign of strength, and you can argue it's a parabolic wedge now. So that will lead to some profit taking, 1, 2, 3. But again, parabolic wedges lead to minor reversals. And so if you are selling here, you're probably just selling out of longs, not looking to get short. And then a pullback on 44, but it's okay if you're trading always in to stay long. Your stop is below 41 or 38, and you can get out below 44, but if you do, you have to buy again above a bull bar closing above its midpoint. It's still always in long. This is not a low 3 sell setup. Even though it looks like 3 pushes up, we have to recognize the gaps. And this is a negative gap, a body gap. And then another one here, more obvious. And that's weak selling pressure. We need a lot more overlap and selling pressure from the bears if we're going to look to get short. But for now, the bulls are controlling the market. Buyers below on 45. High 1, but enough to the downside. There might be sellers above and a deeper pullback, and maybe a high 2. Sellers above on 46. Now we have a micro double top, 44, 46, but a doji signal bar, and it's a reversal setup with a small doji signal bar in a strong bull trend. There's probably buyers below. Second leg down, 47. Good looking bear bar, but context is still bad. Think about what bar 47 is racing to. You can always think about breakouts as vacuum tests of support or resistance. In this case, it's a test of support. And look to the left, what are we testing? A breakout point. Bears sold above bar 40. They got trapped on this upside breakout. A couple legs down to test it. There's probably buyers below 47 and on the close of 47. And look what happened on 48. We bounced and we have a double bottom with 41 and 48. Good buy signal bar, 2 legs down. Bears exit above 48. Always in bulls, if they exited, can buy above 48. Look for trend resumption. Another overlapping bar, 49. Largely overlapping the prior bar. But what about selling below 49? It's a low 1 at the bottom of a bull flag. Not ideal. Probably buyers below. Probably going higher. Inside bar 50, the market's getting squeezed. And you can consider it breakout mode. And again, this can be viewed as a triangle. In this case, it's a bull flag in a bull trend. So we have a triangle, which is acting as a pullback in a bull trend. We'll probably get the upside breakout. 51, the bull's getting the breakout. They still want follow through, but 51 is now a 4th consecutive bull bar, closing above all the bull bars to the left. The bull bars have trending closes, trending lows, not trending highs. This isn't as strong as it could be, but it's enough that the first reversal down will have buyers below. So 51, probably buyers below, probably going higher. And then 52, bull breakout of the triangle 51, and then follow through 52. What about a double top, 44 and 52? Look at the leg up. It's too tight. There's too many bull bars, not enough selling pressure. And all the bars above the moving average, still a tight bull channel. Think about the bears today. We've had maybe 2 closes below the moving average all day. It's clearly a strong bull trend. And again, reversal setups are continuation patterns. There's more buyers below 52. And then continuing higher, 53, another bull breakout, probably going higher. And where are we going? Well, one magnet we have drawn is this measuring gap, measured move. There are always other targets. We can look for a couple other ones. Maybe this breakout, 42, 43, using bodies, takes us to a similar area. And then measured move. The bear's hoping for a double top, which is failing. We can get a measured move of this. That brings us to here. Always different ways to look at it. And by the way, we can see this breakout. Here's that measured move, and no surprise, resistance, profit taking there, but a minor reversal. Strong enough breakout here, probably going at least a little higher, and probably buyers below 53. 54, testing the low of 53 and reversing up. It's a micro channel for the bulls. Not especially strong because of the small bodies and overlap, but where are the bears making money since bar 48? Where are even limit order bears making money? That's a problem for the bears. They're not making money. And eventually there could be a give up bar. And a good example of that is here. This bull breakout, the bears trying for a reversal, and then eventually we get this big give up. And that could easily happen here. 55, a small bear bar, not enough to be selling. Minor reversal, buyers below. And then a small bear trend bar, 56. Bulls look at bars like 56 as a discount. It's a bear trend bar and a strong bull trend. Look at every bear bar since bar 21. And you'll see, really, none of them had any follow through. They bought the close of 21. They bought the close of 28, 37. Even here, no follow through. Here, no follow through. So betting on a bear breakout after, or follow through after 56 is a losing strategy today. And no surprise, 57, buyers below. High one above 57, strong enough breakout here for a second leg. Magnet above, makes sense, we'll probably go higher. And there might be buyers above 57, it's a good buy signal bar. Outside down, 58, almost outside down. Second reversal, second leg down. But again, probably have no follow through on 59, probably buyers below 58 or on the close. Small follow through on 59, but two legs down, testing the moving average, testing a point where bears got trapped, selling above 48. They got trapped on the upside breakout. We're testing support. And then a bull bar 60. High 2, probably buyers above 60. And then a bull bar 61, bull bar closing on its high. The bears were hoping we would just get an endless pullback, but instead we are reversing up. And again, that's where we could get that give up bar to the upside. More follow through for the bulls, although it's really minimum on 62, but no sell below 62. Strong enough breakout 60 to 62 for a second leg. Trapped bears above 60 or 59. Outside up 63. Instead of sellers below 62, there were buyers. And 63 you can argue is a high one at the top of the trading range. But the trading range is minor. It's a bull flag. And it's really, the bull trend is so strong that the pullback is even sloped up. In a way, you can argue we're getting higher lows. So these pullbacks are more sideways than to the downside. We're staying above the moving average. Then there's that give up bar 64, and no surprise where it tested the measuring gap, measured move. Now that we're there, we'll go ahead and erase that. Sellers into the close of the bar. So sellers at the measuring gap, measured move, and traders will argue bull breakout of a channel, low probability bet. You can sell, but if you're selling, you're better to sell out of longs than sell to look to initiate shorts. It's really aggressive to be doing that. There's always an argument to be made, and the argument here is that it's two legs up. 1, pull back 2, 3, pushes up, breakout of a channel, but the overall context supports the market's still always in long, and it's better to look to buy and sell. Disappointing bar for the bulls, 65. Some might exit below it, and there's probably sellers above it. 66, we triggered the sell, reversed up, but now 66 is a high one at resistance, and it's a lot like, where's the example here? 45. The market had a buy climax, a reversal bar, we triggered below it, high one, sellers above. So there's probably sellers above 66, at least for a scalp, and then a deeper pullback. In this case, we did not go above 66, instead 67. They sold the close. There's a tick gap from the close of 66 into the open of 67. A couple legs down, might go a little lower, but the reality is there's buyers below. We're testing support, the breakout point, and if we go a little lower, there's still buyers below. That's what happened on 68. Now we have a couple legs down, reversal bar, but enough sideways in here that there's probably sellers above, and it might be a tight trading range. Inside bar 69, small bar, so small risk, low probability. If you're buying above it, you need to use a stop, probably 3 or 4 times the distance of the bar. Better yet, use a measured move of bar 68 to the downside, but really tight trading range, probably sellers above, buyers below. Bull breakout 70, testing high in the range. If I were to be looking to buy or sell in this tight trading range, I'd rather look to buy because of the bullish bias. So you might have sellers above 70 arguing tight trading range, and there might be. Maybe it's 2 legs up in a tight trading range. After a buy climax, the market's in a triangle again. But overall, still always in long. Inside bear bar 71, but probably buyers below. They may not come in until a little bit lower, but it's a tight trading range. Breakouts are not going far. Stop orders are getting chewed up, and it's a limit order market. Outside bar 72, probably buyers below. Looks like a possible maybe 3-legged pullback. And again, the pullback is sideways, and the strongest pullbacks are sideways rather than down. And this is way more sideways than to the downside. Now we're getting a bull breakout 73. So always be aware getting into the final 10 bars or so of the day on a trend day. So on a bull trend day in this case, it's not uncommon to see a profit-taking sell-off into the close. Bulls taking profits at the end of the day, and the bar ends up having a tail on top, and there's some kind of sell-off into the close, and we're getting into that time territory. So proceed with caution, but still with that out of mind, which it's good to know that, but in this context, it's still always in long, nothing to sell. Bull breakout 74, but lots of overlap on these bars. Not a very good looking breakout. Tight trading range, possible final flag, so this might be the last run for the bulls. Outside down 75. Outside bar, so probably buyers below and sellers above. Strong enough breakout for a second leg, but it might be minor, and the pullback could be deep. And then 76, the second leg. Bulls bought the close of 75, leg 1, leg 2, little climactic, and again, a bull breakout attempt of a channel. So this is a great place for bulls to look to take profits, and aggressive bears will sell. And then a huge bull bar 77, bull breakout and follow through of the channel, but getting late in the day, and the market is already, let me see, market is already up almost 1% today. And so the odds that we just completely take off here and go all the way up here into the close, very slim. Combine that with what I was just saying about profit taking. This might be seen as a gift, and this might be the exhaustive end of the trend. 2 very good looking bull bars breaking out of a channel late in a bull trend. This is different than this. So here, better to look to take profits, I would think. 78, disappointing follow through for the bulls, but not really anything to sell, and so late in the day, probably not worth doing much of anything. Strong enough breakout for a second leg, and weak reversal 78. Probably more buyers below. 79 triggered the sell, but big up and then confusion and probably buyers below scaling in lower. Bull reversal bar and micro double bottom 80, but again late in the day, probably going sideways here. And then 81, an inside bear bar. So no profit taking sell off in this case, and just a small tail on the bar on the daily chart. For always in today, I mentioned it briefly. I didn't mention it early in the day, and let me back up. We're high in the trading range. The blue line is yesterday's high, and it's not necessarily clearly always in long up here. There's one good bull bar, but not great follow through, and looks like a bull leg in a trading range. And then here, bear leg in a trading range, never really always in short. But then this was different. This was a strong looking bull breakout. 23, 24, probably always in long. And then the market never looked back, never became always in short. For stop orders today, okay to buy above bull bars like 7, but if you get disappointing follow through 8 and 9, you probably just get out, look to buy lower. And then no stop order sells in here for me. I thought you could buy above 20, 22, 23, 24. You could buy any of those bars, betting it's an early breakout. And then here, probably a double bottom high 2, buy above 29. Always in long, you can buy above any bull bar, closing above its midpoint. Bull breakout, you can buy the close, buy above. High 1 after a strong breakout, you can buy. Again, it might have been a nested 3 pushes, plus an outside bar that damages the bear case. And then here, parabolic wedge, expecting more of a deep pullback. Not that I would short below 45 or 44, but I'll get into that later with limit orders. 2 legs down, 48, good bull bar. You can buy above it, high 2 in a bull trend. And then same thing with here, high 2 in a bull trend above 60. You can buy above any bull bar, closing above its midpoint. Another high 2 on 68, but tight trading range if you're buying on a stop. You cannot put your stop here. Stop goes down here. And then I thought 76 is a low probability breakout. I would not buy above 76. And if I was long, I'd either look to take profits on this bar or this bar for sure. And then for limit order trades today, probably buyers below 1, sellers above 1, but in this case, they didn't come in until maybe a measured move up of 1. Buyers below the micro channel, but possible trading range. Could be a deep pullback as we got here. Micro channel to the downside, sellers above the first reversal, which would have been above 14, sellers above. And then down here, buyers below 18 and 2 at the support of the bar 2 low and the dueling lines. And then strong breakout, buyers below the first pullback, but there was no pullback until all the way up here. That's a sign of urgency. When you're waiting to buy a pullback and one doesn't come, you have to just get long and buy the market. And that's the analogy Al uses with when you're on the high dive, diving into the pool. You just close your eyes, plug your nose, and jump, and just trust that it'll be okay. And then, so buyers below 36, bad reversal below 40, you can buy below it. You can buy below 44, but expecting a deeper pullback after the parabolic wedge, and it's a decent bear bar, which will probably get a second leg. And there's probably sellers above the high 1, in that case, 45, but that is more of that's a trade that should not be the focus of your day. I think in a bull trend day, you should be looking to buy. And there will be counter trend scalps, and that's one of them, but it's okay to miss those. And then micro channel here, buyers below 57, the second leg down. Bull breakout, bad sell setup 62, buyers below. Then bad reversal 65, buyers below any of these bars. Tight trading range. And then that is just about it for limit orders today. And as far as where do we go tomorrow, well, the market's been in a bull micro channel, but today was a little climactic, and we're getting possibly late in the micro channel after a couple of trading range bars. I expect disappointment for the bulls tomorrow, not necessarily a big bear bar, but probably a trading range and just some sort of disappointing follow through. And as always, please feel free to leave questions in the comments for me and include timestamps for any question specific to this video. Alright, hope everyone has a good rest of their night. Thanks for watching.